Nitin Raheja, who's joining us on the show. Nitin, let's get your takeaway from that commentary as well. I mean, they've managed to, maintain numbers this time around. Of course, some delay in collections, but seem to suggest that things will normalize better than expected. Would that lead you to, feel a little bit more reassured or optimistic, or would this apply mainly to a few select names in the real estate pack?
I think it's going to apply to a few select names, depending on the project profile of these people. I think people who are catering to the mid-tier rung, who are catering to affordable housing, are probably going to continue to sort of see sales happen. But I don't think it's a broad brush for the sector. I think a lot of pain in the sector in the form of a lot of developers who are in the unlisted space, the unorganized sector, is seeing a considerable amount of pain. And all put together, the listed entities, I don't think account for more than 25-30% even today in the real estate sector. So I think overall the real estate space is seeing pain. Some of these developers have evolved. They've moved their business model to more of contactless selling, if you would call it, and so on and so forth. And I think these players will be well positioned compared to the rest.
Nitin, wanted to get in your take as to what the outlook is on the consumption space, because we have seen the growth rate in rural India outpace that of the urban cities, and now nearly reaching 85% of the pre-COVID levels. What's the outlook as to how you see the FMCG sector shaping up? Do you think that hinging on strong growth from rural, that we could see a commendable recovery in this space? What do you like within consumption?
I think you will see the consumption space hold its end up quite well, led, as you said, for the reasons that you mentioned, the rural areas doing well. And in fact, if you go by the fact that while we don't see this in Mumbai, but the monsoon has covered the country 2 weeks ahead of schedule. The crop that has come under sowing is almost a huge leg up over the last year. So you are looking to a good harvest and crop this year. So you should see the rural areas hold themselves up. But again, it is the urban areas which get account for a dominant share of sales and so on and so forth. So, but within the rural areas on the FMCG space, the companies which should benefit, I think you should see the FMCG companies such as Hindustan Lever hold themselves up quite well, because they have a very strong rural base, or even a Godrej and so on and so forth. On the other hand, you should probably see the agrochemical business do exceptionally well in this current year, given advanced cropping that has happened.
Okay, fair enough. Speaking of consumption, in fact, let's hear it out from the management of ITC on the outlook and the opportunities that they see.
We do see a fair amount of opportunities also for us, particularly in our FMCG businesses. I think there's a lot of opportunity in the health, wellness, nutrition, hygiene space. Consumers are in these times going to look for trusted brands. So these are opportunities. I think there are possible opportunities that may emerge over time on account of the geopolitical situation also. We saw one example with a German shoemaker moving on to setting or intending to set pace in our source from Agra rather. So there are going to be opportunities for sure. And it's for us to be watchful of it, to be agile, and make the best of the opportunities that best fits into our capabilities and strategies.
Okay, a couple of other active stocks. Avanti Feeds is up 12.5%. We've got Even a Vodafone looking good today. It's now at about 10, which is pretty decent from where it was just a short while ago. Britannia also standing out in trade, up about 2%. ITC up about 2% post earnings. HUL also 1.5–2%. So clearly that trend in FMCG is playing out. The telecom names are also up, and so are some of the select pharma names. So we'll come back to some of those with Kunal in a moment. But Laurus Labs, let's go across to Vivek on that one as well, because we've got a bit of a bulk deal coming in there. Vivek, take us through.
Laurus Labs, the stock that we are talking about, in a source-based story, what we understand from our sources is that Warburg Pincus, that held another additional 11% stake in the company, has now completely exited their shareholding in the company. Now remember, as early as April 2020, ET Now had reported that Warburg Pincus was looking to completely exit their stake in Laurus Labs. Now, the main reason for that was that the company fund had met its objectives and they wanted to exit the stake. We understand that the demand for the block was quite strong and quite robust. And today what we understand is that Laurus Labs, now remember, had sold around 8% stake in a block deal as early as May 8th, and today sold the remaining a little over 11% stake. So we understand that it was a very large institutional PE fund that picked up a stake, and also we understand that a whole host of domestic mutual funds have shown a lot of keen interest and have picked up stake. In fact, we also understand that Laurus Labs, now remember, has corrected quite significantly in the last week trading session, mostly on the buzz of the impending block deal. So it will be interesting to see how the stock reacts in the coming days, as a significant overhang of the stake sale by Warburg Pincus is now done and dusted as per our sources.
Okay. Nitin, let's talk a little bit more also on the possibility of any kind of surprise impact from an event risk in the US markets. We were taking this line of thought with Sandeep Tandon also earlier this morning, perhaps aligning with pockets of the market here that are slightly less impacted by any shakeup, whether it be in the dollar or rates, keeping a little bit of a neutrality to any sudden moves when it comes to the US markets. What do you think?
Considering the kind of flows that you see from FIIs, I think, you could insulate yourself to a lesser extent. I don't think you're going to be able to completely insulate yourself. So when you do see a broad-based selling starting to happen, you see that across the board. Maybe to some extent what we have seen, if you want to sort of neutralize these broad liquidity moves, what we've seen is it's the FMCG space or it's the MNC space which holds itself up far better. But look, these events are very difficult to predict in terms of what's going to happen from a US market perspective. I mean, you could have a play out from a perspective that that 4 months down the road you have elections, and generally speaking, in the run-ups to elections, the US markets have remained buoyant, and so flows could also be positive. So and then you could very well miss out on a rally, and at which point of time that segment could underperform. So I don't think, if you're playing this game just from a liquidity perspective or in terms of what's going to happen to the US markets, you're really going to be able to call it right. I think the focus has to be, again, on companies and corporates in India who have minimal debt, who are playing out this sort of make in India story, who are going to benefit from the whole China developments that are taking place, and whose working capital is tight. I think these are companies which will, irrespective of flows, demonstrate and trade at premiums.
That's the view coming in.